Good evening, everyone. This is FX RBS with ForexSimplified.com, and we're with the Monday class. We're going to be talking about channels and consolidation and what is the best way to trade them. As we all know, there is bullish and bearish channels, and some people call consolidation a horizontal channel. You can see it all different ways. We'll start with quick fundamental preview. We'll see what's coming up this week. It looks like it's going to be a very slow week. Not too much going on. Tomorrow we have the UK's trade balance in the morning. Not much over the US session, and the home loans in Australia in the afternoon. Then Wednesday morning, manufacturing production for UK. Again, not much. During the US session in the afternoon, the New Zealand official rate, also press conference, Royal Bank of New Zealand rate statement. Another important news announcement on Wednesday afternoon is the unemployment change in Australia. That can move the market. Thursday morning, the US trade balance, unemployment claims, and in the afternoon we have the New Zealand retail sales. Friday morning we have the Canadian unemployment rate and retail sales for US. Not very much over the weekend. We might over the week we might see a very slow week, but as the market always proves, we never know. This is pound dollar chart, 1 hour chart. This is alt. But I'm just pointing this consolidation here. There is a lot different ways to trade consolidation. A lot of traders have very hard time trading consolidation. They don't know where exactly to enter. Do they wait for candlestick formations? What is the best thing to do? We'll go over different scenarios tonight. I'm not sure if you guys recognize any patterns in this consolidation. Since I've been showing and teaching patterns the last few weeks, I would like to point you how you can enter in this consolidating market with a few patterns. I'm sure pretty much everyone can see here the 786 with the 127 converging. So we've been in a downtrend. The market is coming from the top to the bottom. So here we're looking for bearish opportunities. We still This was nice. Let me see if I can find the same example on my other chart. Yes, Victor, this was Gartley. Let me try to see if I can go back that far here. I don't think it's here. Okay, we'll start with some theory in the beginning. But basically, if we have consolidation, there is a couple of things we can do. Let me draw a consolidation here, guys. So we can either try to buy the bottom of the consolidation, sell the top, or we can wait for breakout and then trade from the traded bounce. I will go over all different ways you can enter the consolidation. From the inside, from the outside, we'll go over a few different strategies and ways that can confirm your entry. Now, the most common one that we all do is we try to find an entry either on bouncing inside the consolidation, from the top going down or from the bottom going up. Now, most of traders would like to see a candlestick formation touching the bottom or the top, and this will confirm the entry. This is good strategy. It cuts a little bit of your profits. If the consolidation channel is big, this is a good strategy. Now, so we can trade from the bottom to the top or from the top to the bottom with candlestick formation. If we're using candlestick formations, we need to make sure that the channel is big enough so we can profit. If the channel is tighter, we need to enter as close as possible to the channel line, to the top or the bottom, and this we can do with patterns. And this is what I'll show you in a little bit when my other charts open. Somebody now, we also said that we can trade the breakout. Most of the time, when I'm trading breakouts, I would like to confirm the breakout not only with the price. Let's say if we're having a breakout to the north, but I don't want only the price to be breaking out to the north, but as we all know how much I like MACD divergence. I would like to see during the consolidation some bullish MACD divergence if I would be trading bullish. So if I see a bullish MACD divergence during the consolidation, and then I see a breakout to the north, this will confirm my position that, okay, yes, I would be trading this breakout. It's breaking out from the side that I want to enter. It's breaking out to the north, and I like this trade because the MACD divergence confirmed the direction of where the breakout would be. If we had bearish MACD divergence, I would like to be trading short. So when I have bearish MACD divergence while the market is consolidating, I would wait for bearish breakouts. And this is what I'm going to be trading. If I get a bullish breakout, it's most likely that I wouldn't enter because my confirmation is my MACD. Now, there is a couple ways to trade the breakout. None of those that I will say are wrong. I will tell you which one I like the most. It doesn't mean that the rest are not good. So the first one is you can have a bearish candle closing above the consolidation and the candle is forming a wick. Let me find an example somewhere. Okay, let's say that this was the consolidation. Hypothetically, this was the consolidation here. And we had a bearish full body candle closing below the consolidation. Now, after this candle closes, it forms a wick, and after the candle closes, the price will be somewhere here in the middle. Let me draw a different kind of line. So the price will be somewhere here. I'm still not entering. My entry in this point is the low of this candle that just closed below the bottom of the consolidation. So the wick, this wick that I have drawn the horizontal line at 154.95, this wick now is my entry. After that candle closes, the price will be a little higher, and once the price drops below the wick, this will be my entry. This is the one way to enter a breakout. The other way that I like the most is, can anyone tell me? I've said that a few times. Let's see if somebody knows what my favorite thing is. Of course. we have the breakout, and then this is my favorite way to enter. The bounce, once the market breaks out, comes back to retest, and then I enter on the retest. This way you can profit more, your entry will be better, your stop will be placed a lot safer. You can place the stop higher, and so you have more in profit, and also your stop will be in a safer place because you can afford to put it a lot higher. Yes, the retest. In this case, I would Victor is asking if I would wait for a candlestick. In this case here, when I'm waiting for a bearish breakout and I see the bearish breakout, I would have a pending order waiting to enter. And then my stop, the safest way to the safest place to put the stop would be above the consolidation if it's a tight consolidation. If not, you can choose one of the highs for a stop somewhere above a previous high. But if it's a tight consolidation, 20, 30, 40 pips, if you're trading like a flag or pennant, anything like that, you can place it above. If it's a big consolidation, of course, you will place it above the next high or low. Yes, this is why I'm placing pending orders, because as you see here on the retest, the next candle is just so big that you don't need to lose all those money here. We already know that we will be trading bearish. The market breaks bearish, retest, and you enter. Now let's see what do those. We got the second right shoulder here. Now let's go back. It's here. I want to show you how often you can find actually patterns. Now this is nice consolidation. Let's see how many pips we got here. And it's been going for 1, 2, 3, almost a week. Almost a week, 160 pip range. Very, very nice. And as we see, the first one we get right away. Nice bearish Gartley. 786 converging with 127. We can see kind of support becoming resistance. Good reason to enter the trade. Going bearish. Of course, target 1 and 2 are hit. Target 3 is somewhere lower. So target 3 stays untouched. Target 1 and 2 were before the A. so we can easily see that target 1 and 2 were hit in this trade. Now, the next one, 86 and 1618. I'm moving. After we see this convergence, now we can start thinking, okay, the market might start consolidating here. We enter this level, then we have a 86 bat. We might see some consolidation. So we had our first entry short, then the market came back, retested that same level. Now we know that we're trading in consolidation. We enter here again, target 1 and 2 are filled, target 3 is still on. Let me show you another one. I need to delete some fibs here, or I can just draw it. I'm sure most of you guys would be able to see it right away. But from the top, X, A, B, C, D. Now we have a bullish path converging with those previous lows that are forming the low side of the consolidation. We trade this bullish. Do you think I will get something from the next one? $50, 86. I don't even need to draw the second fib. Now, even this one didn't work, it still filled our first target. Then on the next, we were stopped out at break even. The market comes, retests the resistance. We are not getting another pattern. Maybe we can get a butterfly from here. Now this is a little too much. But you will see a lot of times markets to form bats when they're consolidating. This is the most common pattern to see when the market is in consolidation, the bat, because it will bounce off the top, it will make a little move, it will almost do a little consolidation, and this little consolidation is giving us the 3-2 or the 5-0 of the XA, and then when you pull your fib data away, you would get your convergence at the 86. You will see this a lot of times when markets are consolidating, and you can take very, very good profits of consolidating markets. And a lot of people have huge problems trading consolidation. Let me see a question. All those patterns, I would trade with pending orders, especially when you have formed a strong resistance area or strong support. You can feel very safe for your stop placing it under, and most of the time when you're trading BAT, the BAT will give you the best stop. I mean, it gives a lot better stop than the Gartley, and your stop can be very tight, and you're not risking. Usually when I'm trading BATs, I'm trading with pending orders. Now, if I get a few convergences, sometimes you can get a convergence that's at 786, 127, one with the 86 from different swings. Then you're not sure which one of those convergences will work, and then you would need to confirm your entry with candlestick formation. But if you have one good convergence, or if it's at the 86, since the 86 is the last one to the X, it's you can only, I mean, like, you can trade with just a pending order. And let's see how that whole consolidation fiasco worked. So we had the initial entry that we placed the stops at break even. We were stopped at the last retest of this consolidation on the third target of the first entry, but all others had at least 1 and 2 and limits that were filled. Let me see somebody. Yes, yes. Now, another very good technique, but this is for more advanced traders, and you need to really practice this. And I want you guys to listen very good on this one, because it will be interesting for you. I'm really sure, not 100% sure, but probably you've never heard it of this technique. Always, I mean, like, most of the time, traders are looking for sells at the top or buys at the bottom of a consolidation. But what happens if you come to your computer and the market is here in the middle? Now you need to wait either to the top or to the bottom to enter. But I'm talking in a case where you can see that the market is consolidating. So let's say we've been a couple of days in consolidation, so now we expect we might see more consolidation. And we see the market somewhere here, the price in the middle. This technique, you need to use hedging. So what some advanced traders would do in this case, they will place two orders, a buy and a sell at the same time. They see the market in the middle of the consolidation, and they will buy and sell. And I will need to type a little bit here so you can keep count on the pips. Now, so this was what we said about 160 pip consolidation. So in this case, if the market goes to the top, you might make maybe 60, 70 pips from this lot that you bought. So we're 60 pips up, but at the same time we're negative 60 on the one that we sold. Now once the market comes to the top, we sell a second, we enter a second short. Now we have two shorts. When the price comes back to the middle of the consolidation, now the third entry is plus 60. I'm sorry. And the second from minus 60 is now 0. So you're at break even. The one that you sold in the beginning of this trade. If the market comes all the way down on the one that you first sold, you will be plus 60, and the one that you sold at the top, you will be 120. Like, this is hypothetical numbers, just to give that example. But what we did is we bought and we sold at the same time. The one that we bought, we cashed out at the top of the consolidation. So the top was the first limit here. Then as we limit, we entered a second sell to the bottom. When we got to the middle of the consolidation, our first sell that was negative all the time came back to break even, and when the market moved to the bottom, they both ended with profit. This is a technique that needs to be practiced a lot, because hedging can be fun, can be a lot of fun, but it's also a lot of risk, and you need a lot of practice hedging. Were you guys able to understand this technique that I just presented? I want to make sure that it's clear, because sometimes it can be a little confusing. Buying, selling at the same time. Why? What's happening? How can you do that? If there is any questions, just let me know. Now, what we're doing is we're entering two positions. Now we see the market in the middle of consolidation, and what we do is we enter two positions. One buy and one sell at the same time. The same price, one buy and one sell. Now when the market moves up, the one that we entered long, it's making profit. So the one that we bought has profit, hypothetically plus 60. Just a made up number. When we're at the top, the one that we actually sold made the loss minus 60, but we keep that one open. So here we are at break even. If we close both positions, we'll be break even, and we'll lose whatever we lose on the spread. We actually won't lose anything. Now, here at the top, we sell. So now we have second sell. The second sell at the moment is at 0. So we're still total on our margin 0. But as those two orders start moving lower and lower, the market moves lower. Now this that was negative at the top now becomes 0 in the middle. The second sell that we entered at the top is now at plus 60. If we go all the way to the bottom, the one that we entered short in the middle of the consolidation will be plus 60, and the one that we entered at the top will be plus 120. Now we not only made money on the way up, we made money on the way down. Why did we enter both ways? Why did we enter long and short at the same time? Because we didn't know if the market from the middle would go up or down. If the market would have gone first to the bottom of the consolidation, we would have had exactly the same outcome. So we don't even need to know where the market will go, because we'll make money both ways. We'll make money if the market goes down, bounces and goes up, and we'll make money if the market goes up, bounces and goes down. Let me read over the questions. The question is if this will be archived. Yes, this is being recorded right now, so you guys will be able to watch it. Yes, hedging is the question is if hedging is effective in large consolidation. Not like I personally would do this in consolidation that's up to like 100, 150, up to 200 pips. Consolidation that will if I enter, I'm probably will be out of the first position by the end of the day. If the consolidation is a huge 600-700 pips, maybe 1,000 pips, this might be a good for you, might not be. If you're a very experienced trader, I'm sure it will be very profitable for you, but it's also a lot of risk. So trading this technique is probably best to start with consolidation anywhere around 100 to 200 pips. If it's very tight, small consolidation, it's most likely that you will lose every time. If it's something like 30-40 pip consolidation, it's not worth it. So when you hedge, you don't place stops. The question is where you place the stops. When you hedge, you don't need stops, because as long as you have both orders running, you're at break even. Now once you close when you have both positions running together, the sell and the buy, you don't have a stop. Once you close the buy and the sell stays on its own, or you add a second sell from the top to go to the bottom, then you would place a stop above the top of the consolidation. But initially, when you enter in the middle and you buy and sell, we place both stops with both entries without stops. Yes, this is the very good question. What happens when the market breaks the consolidation and doesn't come back? This is where you lose on the trade. Yes, like so what you will do is once you close your buy, so in the middle here we bought and we sold. The market is going up at the top of the consolidation or near the top. you will limit your buy. You cash out your 60 pips, and as you cash out your 60 pips, you will place a stop order for your sell. For your sell order. You place a stop for your sell, and it will be probably 20-30 pips above the consolidation. Now, you have already made plus 60 pips on your buy. Now, your negative 60 on your sell plus your so you're at break even, and you stay with your stop that is maybe 30 or 40 pips or 20 pips, whatever you can afford, that you can place your stop above the consolidation. And if the market breaks consolidation, it will stop you out, and this is where you take your loss. Like with every trade, you can lose on any kind of trade. Now, if the price breaks above and then comes back in, well, you're still stopped out. You're losing. If you can enter based on anything on a candlestick or something and continue on trading, that's fine. But as long as for the first entry you've been stopped out. I'm reading the questions. The question is, wouldn't this be the same if you waited? Now, if this trade worked out, we end up with 60 pips to the top, 60 pips to the bottom, plus 120 pips to the bottom again. So we made 240 pips. If we wait to the top and we enter, we'll make only 120. So what we did was double the profit. Now, a false breakout, it's always a bad thing. Like you can't. If you're trading inside the consolidation, no matter what kind of strategy you use, if you enter at the top, if the market tries to break out, it stops you out and comes back in with this false breakout. There's nothing for you to do. This is just a bad trade. This is the bad trade that you can take. It's the same way if you want to trade the breakout. You can enter on a false breakout and the market can enter inside again. There's always risk, but we're trading probabilities, and as long as we keep our limits bigger than our stops, and we calculate the risk in our favor, at the end you'll be making more than you'll be losing on your losing trades. And this is what the point is. And I'll give you very good lesson. Don't try to eliminate the trades. Don't look for reasons. I mean, a lot of people are studying and trying to find a way to eliminate trades, to eliminate losses. Go and learn ways that will show you different ways of entries. If you are learning how to eliminate trades, you will be learning how to eliminate profits as well. What you need to do is just get comfortable and good in the strategies that you're trading, and this way you'll be making more money. If you're trying to eliminate the bad trades, you will be eliminating with the bad trades the good trades, and it's just wasting of time. Of course, it's always good to confirm, but don't get caught up in trying to find ways of how not to trade, because we're here to trade. Okay, let's continue. And we won't have time for all of it, will we? We can always continue another day. Just I want to let everyone know that probably starting next week, the Monday classes will be always free, and probably will eliminate the 15 people limit, the 15 people student capacity on the Monday classes. This is probably starting next Monday, so everyone will be able to attend the Monday class. And also we might be moving the Monday classes from 9 to 8, so it is not 100% yet, but we're planning on moving the Monday classes to 8 o'clock. We want to know how you guys feel about it, and if 8 o'clock is good for everyone. This is 8 o'clock Eastern time, and just let us know. We can even do the Monday class in the morning. How are mornings for you guys? Yeah. Okay, so it won't be in the morning. I don't think that most of the people will like the morning because you need to concentrate more on trading. The morning probably was more something like noonish. Once the U.S. session is closing and when the market slows down, this is what I meant for a morning. But probably the evenings are the best. But the classes will still be recorded, and will be able for viewing in the archive zone for all the subscribers. Victor, what did you just ask? I missed that. What did you mean? Any possibility on 30 minutes? What was this on? Was this for currency pair or um? We can try something like that, like a web conference during the session to plan some trades. We can do something like that as long as we can get everyone pretty much at the same time. We This probably would be a good thing. Yes. So yeah, tell the rest that starting next week we'll be having those classes without a limit, so everyone will be able to join. I will do very quick analysis, and then we'll be finishing with the video. Now, this is your daily. It's trading and kind of consolidation for the last few days. Not a lot of movement. We broke an inner trend line going to the outer trend line. Next resistance area is at 38.50. Not sure how far will the euro go. There is a talk about Greece, and they actually might be doing something about their problem, and if that is fixed, what they will be doing probably is they will freeze the wages so they can cut on the deficit, and they're taking some other measures. If they start that, this might be positive for the euro. So we might see some bullish move. So we need to watch for those European news and what's going on with Greece at the moment. It's very important. But currently, if nothing changes, most likely as soon as we touch the trend line or the resistance, we'll see a further bearish move. There is very strong MACD, bullish MACD divergence on 4-hour time frame. (15-minute), we had a bearish crown this morning, and some of you guys I know entered it. Last week we had this bullish gauntlet that the price didn't quite got there. Let's see if we can get another pattern here to go bullish, because still based on the 4-hour and this strong MACD divergence and the positive Euro news, we might see some further bullish move. The only convergence that I see, but I don't really like, is the 618 with the 618. This is consolidation at the demand zone, so we might see some bullish move once we either touch or enter in this zone between those two horizontal lines. As I said, I don't really like this convergence, but this might be an area where we will start looking for some bearish entries. Pound dollar continuing the downtrend, very strong downtrend. This is the trend line. This was support becoming resistance. We hope that the market will come retest that level and then bounce that lower, but it seems like the price won't even make it there. Pound in a very strong bearish move. The one we're just watching. The crown that we missed this morning because they had a different swing. We can see how a bearish MACD divergence can make the market turn. Here we have demand zone. We might see some bullish move now. We see a small bullish MACD divergence forming between those two lows. Also, we are at the support level, so we can see some bulls entering the market. As long as this level holds, we will see some bullish move. This is Swiss franc dollar 4-hour chart. Very strong bearish MACD divergence. Market broke support level.
Unmuted.
Strong bearish MACD divergence. Market broke support level. Trying to enter back in the consolidation. If we see the MACD making lower highs, like this one, let me just circle a few. This will confirm a further bearish move. We have two resistance areas, support areas, resistance becoming support. 0615 and 0490. So we can see the market come test those levels, any of those two levels, and bounce back to the north. Any of those two levels are good. For now, we're looking for bearish patterns on smaller time frames. Convergence 86 with AB times 2 equals CD. Currently here. Let me draw the lines, and I will delete the expansion so you guys can see it more clear on the chart. Do you guys can you guys still hear me? I want to make sure I'm on. Okay. There is a question how to determine a B and C on the patterns. My charts are refreshing. So what you do is we're looking for the cleanest, the best convergence that we can get. Now, as the market starts moving, I will hide the charts so I can give you a hypothetical trade so you can see what I would do. So here now we have our A. I'm sorry, I'm moving the charts too fast. The market starts moving up. It hits the 382. As it hits the 382, I start automatically thinking bearish bat. Now I would pull my fibs. I will see if I can get any convergence of the 86 with either 1618 or if I use expansion lines. If I get a convergence, I will use this convergence as a potential entry. Now, if the market continues and gives me a 618, now I have two swings. I have two sub-swings. The one will give me convergence with the 786 with 127 most likely, and the other one is giving me 86 with 1618. They're both good. We don't know which one will be the best. We have one main swing with two sub-swings. We have two possible entries. What we can do now is we can launch the pivot points and see where we have convergence. Now in this current case, let's see. We have convergence of the 786 like right now, even on this trade. So if I had two convergences, I would use the one with the pivot point, and most likely that I will want to confirm this one since it's the 786 with a candlestick formation in case the market tries to give us an entry on the 86. So we can be covered both ways. Now for this trade, let's see if the 86 is formed. Not yet. Now even this next swing, now first with the first subswing, I used the expansion lines with my B here, and I had 86 with 1618 convergence. Now I'm using the next swing be here, and it's giving me exactly the same convergence. Now, two different subswings are giving me the same convergence. I don't even need to think about it. Now, we're planning an entry at 107.86, stop above the X, 108, let me see, 108.24. Let's see if there is, oh, that's the last pivot point for today. Then targets, the first target I want to use is, let's see how far the stop is. 40 pip stop. We want to go for at least 55 to 60 pip profit. Good first profit would be 0754, but this is not good risk reward. So we either need to eliminate this limit or not enter the trade. I don't like trading one-to-one risk reward, and this is even less than one-to-one. The next target that we can have is 107.33. Let's see where the pivot point is. $28.33 is a good limit. 107.33. This is giving us better risk reward. If we can, if the next pivot point is closer to 0790, we can push the entry with a couple pips higher, but that won't make a lot of change. Now 0733 for first target. Now the second target will be a lot better. Will be 0690. And for third target, we can use 0658. Okay, this was on the franc. USD Canadian. Finally, we got to the support. What we need to see if we're going to bounce off this support. Here we have bullish AB equals CD pattern, so it's very likely to see some bullish move. Now I was hoping that we can get some kind of head and shoulders pattern. We didn't quite got one here, but we broke the trend line. This is like a horizontal break. I'm not so thrilled about this break. Now we have been trading the last couple of days in this consolidation. It is 80 pip consolidation. Would be nice to see a breakout of it and then retest, or at least we can go even to a lower time frame and find, because there is a tighter consolidation here. And trade this breakout. But we want to make sure that on the breakout we'll take at least this high here. Otherwise, we'll still be trading inside the consolidation. So we want to see the price move higher than this previous high, maybe touch the pivot line, and then we'll come back and maybe we'll bounce off the previous pivot line and the support that will be formed from the past resistance. This will be a good trade. Let me just hypothetically pull a fib. If we would to get a bounce of this pivot line, the green one, then the resistance is 8382. So this is very likely trade, if I can say that. Also, did you guys see the MACD divergence? Nice, very strong MACD divergence. So entry, $102.95. But only if we first take what is 103.07 or 507 need to be taken first, and then we need to retest the top of the consolidation. Dollar yen daily, the bullish head and shoulder that we waited for such a long time. We entered on a crap on 1 hour, had a couple of limits hit. Currently we're waiting for the price to come back somewhere in between this consolidation, the past consolidation here. This is our demand zone, and we'll look to buy back in. Also daily, we had bearish head and shoulders. The market dropped, now it's coming back, forming a bearish gargle at 0.9166. So 09160, 09170 area, we will be looking for sell opportunities. What we can do is we can wait for the market to hit that level and enter on a bearish candlestick, maybe like a 1 hour candlestick, or we can try and find a pattern. Currently there is nothing much forming. If the price drops a little lower, we will probably form what is called a tree drive. I haven't taught you guys yet the tree drive, but the entry is currently converging with that pivot point. In order to have a tree drive pattern, we need the price to drop all the way here. If the price drops here and moves up, we'll have a sell at 91.66. We'll have a sell at 91.66 if the price bounces off 90.50. We can still see some bearish move here. It's very possible that we come to the 90.50. But even if we don't, once the market hits the 91.66 level, if we don't form any other bearish patterns, we can either trade the bearish candlestick or wait for a possible head and shoulders. Well, and it will look something like, we'll take the low, we'll come back, retest this left shoulder, and we'll enter here. In the 0 and 4 hour, we broke a downtrend line. We can see some bullish magnet divergence. We entered short at 70.77 a few weeks ago. I still have one left lot in this trade, still one running short, and we saw some very strong bullish move yesterday. We can see the market drop lower, but currently this trend line, the backside, is giving us a very strong support. Also, when was the Z1 rate coming out? It's Wednesday. There's a lot of time to Wednesday. This we won't stay in consolidation for that long. But actually we can, because not much going on this week, so we can actually see some straight lines, meaning that the market won't move much. On the smaller time frames, This is 1 hour chart. We just tested a resistance level. On the intraday scale, we can see some bearish MACD divergence. We can see some bearish move here. Formed a sell head and shoulders. It might move another 20-30 pips. Those lows here are converging very close with the pivot line that can act as support. So we'll probably see the market retest one more time the right shoulder. We can sell that. And limit here. Make sure you limit before that pivot point, because we don't know how far would that price go. It can drop a lot. You can have a second position open just in case the market drops even lower, but make sure that you take some profit before 69.55. If you guys have any questions, let me know. If not, we'll be ending this meeting, and I will see you later in the chat room. It was good to see you all, guys. All the JPY pairs have been consolidating, and honestly, I've been looking at them all day, and I can't make up my mind of what do I want to trade. I had a few. Let me see. I believe was no, the New Zealand. I wanted to trade a possible breakout here. New Zealand JPY. I would like to short this level with a candlestick formation. If we form candlestick formation at this level, this is 63.13. I would like to short it, but I want to see candlestick formation because we can also retest higher. The MACD divergence is very flat, and we can see a little move up and another move down. On this move up, we can retest the resistance. This is why I want to see a candlestick formation to trade with smaller stop. Now the Euro JPY, let me move the fibs. A good place to buy. is here around the 786 to 86. We'll see what kind of bounce we'll have. If we get a 382 or 50 bounce, we'll be looking to buy the 86. If we bounce at the 618, we can either buy the 618 because even the 618 on its own is very strong. Support becoming resistance, now becoming support again. You can see all those lows here and those two highs that respected that level. And we can see another bounce there. Pound yen is forming a small, it's kind of white, but it still is looks like a bullish head and shoulders. Let me move the chart, see how the 15-minute look like. I don't like those candles. But if we see bullish candle closes here, we might have a good entry. Make sure if you enter long, make sure to profit before the high. So profit somewhere 136.50. Make sure you profit before 136.50 and move your stops to break even. So even if you enter somewhere here, it will be 135.20. You have about 120-30 pips to make before your first target. And with this, I'll be finishing the video, and later I will see you guys in the chat room. I wish everyone safe trading. Thank you guys for joining tonight. Thank you everyone. Yes, thank you.